GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as thrilling as literally catching a bull by the horns last summer in Spain. I'm your host, Jay Hamilton, and today we have a special guest, Philip Swift. Philip is the managing director of Bitcoin Magazine Pro and founder and CEO of Trendstorm, a smart trading company. He's also the creator of indicators that you have probably seen before. We use them at Milk Road. I'm talking about charts like the Pi Cycle Top Indicator, Global Liquidity, onchain metrics like realized HODL ratio. You know why I love Philip? He's all about helping people understand Bitcoin through data. Today, Philip is going to guide us through what he's looking at right now and answer the million-dollar question, where will be this cycle top? Before we jump in, we just need to take a moment to hear from our sponsors. Whether you're bullish or bearish on MicroStrategy, T-Rex ETFs are your gateway to dynamic market plays. Get exclusive access to leveraged exposures with the first 2x short or 2x long ETFs designed specifically for MicroStrategy stock. Position yourself with precision. With T-Rex, you gain access to powerful tools for sophisticated investors. Meet Uphold, a trading platform that's changing the way you think about money. Imagine this, earning up to 4.9% APY on your US dollars. No catches, no lockup periods, and no fees. And yes, it's FDIC insured up to $2.5 million. They offer access to over 300 digital assets, which you can trade, store, and exchange with confidence, knowing Uphold operates with a 100% reserve and a transparent model. Create your account, fund it with a few taps, and you're ready to go. Click the link in the description and join Uphold today. Philip, welcome to the Milk Road Show.
Hey man, thanks for having me on the show. It's a pleasure to be here. I'm a big fan of Milk Road.
Thanks. Likewise, big fan of Bitcoin Magazine Pro. Okay, we could just stroke each other's egos all day, or we could talk about another part of our ego that's actually doing very well right now, which is the markets. Holy shit, Philip. It is going down. Stuff is happening. What are your thoughts on where we are currently in the market? You mentioned before we started recording, so I'm going to actually poke you on this, that you're seeing some data come in since Trump was elected. Give us an idea of what you're seeing right now.
Yeah, so I mean, just take a step back for a minute. We've obviously been in a period of consolidation for a good part of 2024, right? So we had in Q1 this year, we had the ETF, I call it the euphoria pump, where people got overexcited about the ETF launch, pumped us all the way up to 70K. And then since then, we've had 7 months of chop. And during that chop, we've seen a lot of derivatives traders get wrecked who were trying to long the breakout that never came. And they've been flushed out, that euphoria is gone. And then since the Trump election, obviously Trump being very pro Bitcoin and crypto. And I think as much as that, the Democrats not being in, who we know were pretty horrible to us as a category, that's meant that, yeah, we've now had the escape velocity to get out of that range. And I think today, we're up into the high 80s. So you love to see it. Love to see it. And I think what we're starting to see as well now is a lot of media attention post-Trump around the space that we just didn't have before. And that has a reflexive, the reflexivity is kicking in, and that's going to keep pushing us up higher. So yeah, all looks good. Unless you're a bear, then it looks absolutely dreadful right now. Pray for the bears. I do think as we approach 100K, it's such an important big round number. I wouldn't be surprised to see a lot of choppy price action around there, as people think, is there going to be a fake out and we don't actually make 100K? So just be wary of that. But I do think, we will eventually go through. And I think certainly the first half of 2025, at least, is looking very strong. And yeah, we'll look at the data in a little while to sort of forecast what might be happening next.
You've been through multiple cycles before. And I think that everybody thinks about the bear as being the emotional time and the difficult time. But honestly, I always say that the bull, especially the crazy banana zone part of the bull that we believe we are at the beginning of right now, is actually the more emotional part. It's much harder. It's when people make a lot of bad decisions. What's your advice to people who have not been here before as we enter this next phase?
Yeah, 100%. I totally agree with that. I think in a bear market, you've just got to grind it out. You just got to be patient. Whereas in a bull market, like you say, the emotions can definitely get the better of you. And I think whether you're new this cycle or even if you have been here for the past, I've personally been here since 2017. So I saw the 2017 top and then last cycle's top. You need to just have a very clear plan in place now in terms of what you're going to do. And I would suggest write down that plan like now. And I would always recommend not trying to catch the Pico top of the cycle top because you won't get it. And if anything, you'll think it's coming further down the road and you'll just, take on more and more risk. And that's how you can get seriously wiped out. So have a plan. That plan should probably include scaling out as we go higher. You can choose where the levels might be and what percentages you're scaling out. But I would definitely recommend writing down that plan. Certainly now that we've broken out of the range because the emotions are already kicking in. I can see it on Twitter. And, there will also be a lot of bad advice on Twitter. And they will be screaming when we are at the top that it's going to go higher on Twitter. So that's why I personally think using data, and we'll look at some of the data today, why that is so valuable, because it helps you, block out that noise and just focus on what's actually happening in the market.
It's one of those things where everybody right now thinks that saying a projection of, especially a few weeks ago, of 150 or 200 or even 300,000 Bitcoin was like totally bananas. Well, wait until we get to the point that people are predicting $1 million Bitcoin and you're believing it because everything is going so crazy. And it feels like it really does get to the point where you think you're a genius and you think everything is going up forever. And that kind of leads me into my next question is, what's your point of view on the 4-year cycle? We've had these 4-year cycles in crypto and even in the larger economy of stocks and investments have been going in 4-year cycles for quite a while now. Do you think that this continues? Do you think that we're going to have another blow off the top and then another big drop at some point?
Yeah, look, I've seen a lot of people try and dodge this question because it's a tricky one, but I do actually have a point of view on it. So I'll stick my neck on the line and we'll see if it's right or wrong. To date, Bitcoin has had these near perfect 4-year cycles throughout its life, right? And I think, there's various reasons for that. There's the Bitcoin halving schedule, but also, as you say, global macros kind of also worked in that way. What I've noticed is that really, we are in a transition phase now. So one of the things I love most about Bitcoin is that retail got there first, right? We had this 10 plus year window where you didn't have to be an accredited investor. Anyone could find out about it and you could benefit from Bitcoin. That's what I think is amazing about it, or one of the amazing things. And that meant that it was this kind of contained vehicle. But since the ETFs launched at the start of this year, I genuinely do think we are now seeing institutions coming on board. We can see it in the data. And whilst I don't think they're fully on board yet, because it does take time for these big institutions to kind of, get things aligned to start buying into the ETFs, they are certainly here now. And so this cycle, we are in this sort of fuzzy transition period. However, I do still think we're going to get a 4-year cycle this cycle. But I do think this is probably the last one. I think after this one, Bitcoin will be so big, it's going to be, potentially multi-trillion-dollar asset with institutions buying in and out, operating with it as part of a global basket of options that they can trade in. So I think this is probably our last nice, clean 4-year cycle. And after that, it's going to be more in sync with other assets in the global economy. So we can enjoy this one.
If you buy into what Philip is saying, then this is the one thing I always want our listeners to know. This is not the last chance to get in. And I truly believe that there's never a last chance to get in. And I think that's an important perspective as an investor is if you start to have the feeling of like, hey, I'll never get in again, then that's when you FOMO in and you make bad decisions. But yeah, very interesting. You're the first person to say that you think this is the last of the 4-year cycles. As you said, most people won't directly answer this question. Though,
no, I'm a bit scared to stick their necks on the line, but hey, let's see how it plays out. But it would make sense to me. But like you say, it doesn't mean that the asset is not going to significantly go up and down in the future, right? There's still going to be fantastic buying opportunities in 5, 6, 7, 8 years time, right? It's just, we're just talking about this clean 4-year period that has played out since inception. I think that probably is going to come to an end now.
Okay, let's go to some of the data. in order to understand where Bitcoin and where crypto is headed next, that's the question that we all want to know. Where's the cycle top? Where are we going from here? Let's take a look at the data and see what the data can tell us. I want to start with global liquidity, which is a very important chart that we use at Milk Road, one of your charts that we use. Take us through what you're seeing right now from global liquidity.
Yeah, I mean, rightly so. I would say this is probably the most important chart for Bitcoin and crypto. And, before we start looking at derivatives data or on-chain data, deep diving into any of that stuff, you have to start with the bigger picture, especially given Bitcoin's size now. What is happening in global macro and global liquidity or global M2 money supply is a really important metric. So what is global liquidity? It's essentially telling us how much money are central banks injecting into the global economy, right? There are various ways they can do this. They can just full on print new money. That's one way of doing it. Or they can do things like changing the mandate of how much capital banks need to keep on their balance sheets, right? They can change that, and that in turn impacts how much they can lend out and therefore how much money goes into the global economy. So there are various ways of doing it, but essentially it's central banks turning on and off the tap of how much money is coming in and out of the global economy. That's the way to think about it. And Bitcoin actually benefits from global liquidity going up in two ways, really. So first is that there's just more money in the system, and that sort of loose money, if you want to call it that, tends to find its way eventually, takes a bit of time, after several months finds its way to risk assets, right? Because investors want to get a good return on their investment. And so they look for risk assets. And Bitcoin and crypto is regarded as a risk asset category right now. It may not always be like that, but for now it is. But Bitcoin also benefits, it's like a double hit, if you like, from the fact that it is a hard asset, right? That is its primary design, is that its supply schedule is fixed. So at a time of loose money, when central banks are just, sloshing the money out, people will also be hunting out hard assets like Bitcoin. So it has this double benefit. And when you look at the chart, you can see historically when global liquidities, which is the blue line on the chart, when that starts to make a new all-time high, a few months later, Bitcoin will also start breaking out and going into a new bull run. So we saw it in 2017. You can see when global liquidity started making a new high pretty soon after 2016, really, as well. 17, Bitcoin just went up. We saw it again in, sort of 2020, global liquidity making new highs there. What happened afterwards? Bitcoin then went on its big run. Look into this year, again, it was sort of July time this year that global liquidity started making new highs. What's happening now? A few months later, once again, Bitcoin has broken out. So really, really important chart. It's important to know why it's so fundamental to Bitcoin. And I think we're just starting to see Bitcoin reacting to global liquidity now. So yes, certainly shaping up to be very strong macro backdrop for Bitcoin from a global liquidity perspective.
Yeah, this perfectly aligns, Philip. You and I and the Milk Road team are directly in sync. This aligns exactly what we say all the time here at Milk Road, which is that global liquidity is what moves markets. It is, everybody thinks it's the Bitcoin halving. It's not. It just happens to be that those two things line up. That's just a coincidence. It's global liquidity. It's always been and will continue to be. And it's remarkable. When you look at the chart, the lines are so evenly matched and they rise together. So as you can see on the chart, global liquidity is rising right now and is at the beginning of really starting to take off. There's a lot of catalysts coming in. I mean, China being the one that we've talked a lot about recently, but we also have a new American president, which we mentioned earlier in the show, that will likely, when he takes office, inject even more. So things are looking good there. Well, let's go from banks and the central banks printing money and creating catalysts to how they manage interest rates, and how they manage interest rates also has a big impact on the price of Bitcoin. What are you seeing when we look at this?
Yeah, so obviously, like, rates coming down means that savers and investors are, again, they're going to hunt out a better return than they would get in a savings account or with T-bill treasury bills. And so again, that money will find its way to risk assets, right? So that's why I guess the common viewpoint is that lower interest rates equals good for Bitcoin. That's why, right? And because that money is trying to allocate to risk assets to get a better return. Now, It's not always quite that simple, like in terms of like the direct correlation. However, it's more the expectation of the market in terms of what's going to come next for rates that will have that effect for Bitcoin. So let me explain that, unpack that a little bit. Since the COVID crash, rates had not come down in like 4 years, right? And you can see it on the chart there. Rates came down in 2020, and then they were flat for a while, and then they were up only until 2023. And it's only the past couple of months that rates have come down, right? Which is, again, like I said, the market perceiving things to be bullish for an asset like Bitcoin, but also it's the expectation of what has come next. Given that rates have been so high for so long, when rates start to come down, the market expects there to be further rates into the future. And that creates a confidence within the market around risk assets like Bitcoin. So you kind of have this perfect, and it pretty is much perfect at the moment, like a global macro backdrop where you've got global liquidity increasing, making new highs, has been doing for a few months. You've got interest rates starting to come down, and the expectation from the market that we will have further rate cuts in the future. Now, whether we do or not, that doesn't change how the market is actually feeling right now. Participants in the market are feeling right now. So that's really, I think, why we're seeing this really strong surge for Bitcoin and the markets generally right now.
Yeah, it really, as you said, it's a perfect setup. It's just the most ideal setup you could want as an investor to see in the space. And we just got a 25 basis point cut. We'll see what we get moving forward, but there seems to be a general expectation. I don't know what your target is that you have in mind, but the range of everybody we've had on the show is, and some people think as low as 2, and some people think more like 3.5 is probably the low of where we get to. I don't know if you have any thoughts there.
Yeah, look, I don't know. I'm like, forecasting interest rates is not my bag, so I'm very reluctant to give a number on that because it would be a bit finger in the air. I guess my reservation around that might be if the Trump government and other governments around the world just start like just absolutely having really poor
Printing.
fiscal management, print, then there will be pressure to bring those rates back up. So that's why I would perhaps just add a bit of caution there in terms of where rates might end up. But as I say, where they actually end up doesn't really matter right now. What matters now is where people are thinking they're going to end up. And right now, people think, as you mentioned, their rates will continue to go down. And that's why we're seeing such bullish price action, or partly why we're seeing such bullish price action.
Yeah, it's a great point that it doesn't actually matter what happens. It just matters what everyone thinks, which is why investing is so much about human psychology. It's really one of the biggest parts of investing, as important as understanding data. Let's keep moving along. Another great chart that you guys love to look at and that tells a great story is the Bitcoin 1-year HODL wave. What do you see when we look at this?
Right, so this is actually a really important chart. So, right, we've dealt with global macro and it looks really, really good. So now we understand what's happening there. Now we can drill down and look at what's actually happening on the Bitcoin network. Okay, so this is a piece of on-chain data. And what we're looking at here is the percentage of Bitcoin that have not moved on-chain for at least a year. Okay, and that is the orange line you can see on the chart. You see that orange line goes up and down at various points in Bitcoin cycles. All right. Now, this is really interesting. And I always think of this as like the longer term, probably fair to say, largely smarter money in the market. What are they actually doing? Not what they're saying they're doing. What are they actually doing with their Bitcoin? And what these guys do, because they understand Bitcoin well, because they've been in the market for a long time, right? They have to have been in at least a year, right? Because they've acquired Bitcoin at some point to be represented in this data. These guys, and I say these guys, it's a collective, it includes people like you and me probably to an extent, accumulate. They understand Bitcoin's 4-year cycles, which we spoke about earlier. So they accumulate in the bear markets, right? When price is low, going down, these guys know that at some point we're going to get another bull run. And so they're accumulating. And that's why the orange line you can see on the chart almost has this inverse relationship with price. So price is the black line. If you look at 2015, 16, it's a pretty clear example of it. In the bear market, 2015, 16, the 1-year HODL wave actually went up, right? As these long-term holders were accumulating Bitcoin and they were not selling it, right? So it sat in their wallets for at least a year, and that's when it gets picked up in this data set. Then what happens is as we approach a new all-time high, so Bitcoin starts to go into a new bull run, they start to realize some of that profit, right? So they probably, let's take this cycle as an example, they were probably accumulating around, $15,000 to $20,000, around the time of FTX blowing up, and they held it until we got to, 70K. You can see in 2024 Q1, that orange line dipped down a bit, right? Because every time, we've seen it in previous cycles as well, when price gets back to the previous all-time high, long-term holders start to realize some profit, right? They've made a good profit, good return, but then they also hold some for much later in the bull cycle. And that's kind of where we're at right now. We've had a little bit of selling from them in Q1. And now you can see as price is breaking out again, just starting to make a new all-time high, that 1 year HODL wave is starting to come down. But you can see, based on previous cycles and based on what we see in other data sets, there's probably still a long way to go on this. And I think that 1 year HODL wave, keep an eye on that this cycle. I think that's going to come down by quite a lot as we move deeper into 2025. So this is kind of showing you what the supply side of the market is doing, how much supply is coming on. Like, it's not just from these guys, but it's a pretty good proxy.
Yeah, it's a wonderful chart because you can remove your own bias and your own thoughts from the equation when you look at a chart like this and just say, hey, what is the smart money doing here? Like, let's be real. Too many of us are dumb money. We know it. I know we all have an ego and we try to crush it and think we're a genius. But look at a chart like this and it keeps it simple because there's a lot of smart money out there. And if you look at how they're following it, everything is saying, hey, yeah, they're in right now and they've been in since, as you said, it's been going up since the bottom of the bear. Now there was that dip, but definitely a positive chart to look at and one we'll be watching throughout the cycle. Let's go to how capital flows throughout the cycle is also another great chart to look at.
Yeah. So if we've just looked at, a good chunk of supply that's potentially going to come onto the market and where those guys are at, this is the other side of the equation. This chart is essentially showing you hot money coming into the market, okay? When it gets really hot, it's telling you, be careful because we might be getting close to a cycle top here because you can see new money's FOMOing in, all right? So this is looking at the cost basis of addresses that have held Bitcoin for less than a month, all right? Mm-hmm. So relative to the rest of the market. And I know that's quite a lot to get your head around, but essentially think of this, as I say, of the extent to which new money is coming in and buying at high prices relative to everyone else, like the previous chart, who've been holding Bitcoin for a long time. So when the percentage of these guys starts to make up a lot of value in the total network, that's telling you things are getting really hot here, because there's loads of people coming in and buying at really high prices. And that's causing this group who've held for less than a month to make up a large proportion of the value in the total Bitcoin on-chain network. Yeah.
Very interesting. Okay. Yeah. It's a great, fascinating chart. Okay. So tell us the story that this chart tells when we look back.
Yeah. So when this gets up like plus 50%, you want to be paying a lot of attention, because we've seen in previous cycles when it gets to, around 50%, whether it's in 2017 or 2021, that was when there was the max amount of FOMO, right? I mean, if you'd have probably looked at news articles around then, or you remember them, everyone would have been talking about Bitcoin, saying it's the next big thing. Of course, the market can't sustain that amount of new hot money coming in. And at that point, all the long-term holders are selling to these guys and the market eventually tops out, right? So you can see that in 2017, 18, 2021, when this got above 50%. Now, what's interesting is in 2024, Q1, you can see the ETF spike, right? We had this little spike of new money coming in, but it wasn't that significant. And you and I were talking about this before we went live on air, and I just got a gut feel, and I could also see it in the data, and you can literally see it in this data set here, that around the ETF, there was some new retail coming in, because it was a bit of new news for the market. But it was nothing like we had seen in previous cycles. Nothing like 2021, certainly nothing like 2017. And so I think we had a similar spike in 2024 to what we had in 2019, where price rallied off the lows up to like 14K, where there was a bit of new news, bit of bit of excitement around Bitcoin, but that was it. And I think we're still yet to see the main run up. And I think, Trump, global macro sort of opened up the gates to news articles around Bitcoin and crypto and new interest flushing in. And I think we're just starting to see that on that chart now. It's around 20%. But as I say, you want to be paying attention around 45% plus.
It's a great point and something we've covered a lot in the past. We had a few episodes with a bunch of different ETF experts, including James Seyffart from Bloomberg. And he talked about exactly that, how the data showed that most of the ETFs was not new money yet, not new retail yet. Some, but not to the extent that I think a lot of us thought it was initially. It was actually just a lot of crypto natives buying off-chain for the first time for tax benefits or estate planning or various different reasons, which makes a ton of sense. Like, we both can get that. I just want to make sure I'm clear here. So when we look at this chart, you're looking for 45% as the top?
I mean, look, I'll be paying attention to this chart ongoing, right? Even the past week, I've wondered where it was at, and you can see it is starting to climb right on the far right of the chart. It's climbing up to around 20% now. So we are seeing, I'm not surprised given the media attention, new money coming in essentially. And I would say, I obviously don't have a crystal ball on where this thing's going to top out. All I can do is look at the data as well. But based on prior cycles, I would certainly be paying attention when it gets above 45%. But it could go all the way up to, 78%. Who knows, right? Mm-hmm. But in terms of managing your risk, I would want to start paying attention around 45%.
Okay, great. Last chart to look at is the MVRV-Z score, which I'm going to get you to explain this one because we have not used this chart in the past on the show.
Okay, this is actually like a bit of an OG in terms of like on-chain metrics. And it's actually one of our most popular charts on the site. It's actually free, so anyone can go and look at it. And it's linked in a way to the previous chart. So MVRV-Z score is looking at the difference between the current market price of Bitcoin relative to the realized price. Now, realized price is the cost basis. So at what price did everyone buy their Bitcoin? That's the easiest way of thinking about it. That is realized value, right? The RV in this chart. And that is the blue line on the chart here. That blue line is telling us what is the value of the cost basis that everyone in the market got in at. So say, for example, I bought all my Bitcoin at $5,000. You bought all yours at $15,000. We'd have an average cost basis between us of $10,000. So a realized value of $10,000, right? Even though today's price might be, $88,000. Okay, so that's the difference between realized value or realized price and market value. Okay, so market value you can see looks like price because that's pretty much what it is. Price times the number of Bitcoin in the market. So where this gets clever is we then run a statistical analysis called a Z score. A Z score takes two data sets and basically pulls out the extremes in those data sets. So when market price is really stretching above the entry price that we all got in at, you can really see that on this Z score, the orange line on the chart, and it goes up into that red band at the top, which is kind of saying market's overheated, be careful, be careful, be careful. All right. And the opposite is true, right? So when price goes below people's cost basis, right? That's the depths of the bear market when everyone feels terrible. Shit, I bought at $20,000 and now it's down at $10,000. It's going to zero. It's over, and you see all that nonsense on Twitter. You'll see this Z score indicator go down into the green band, right? And it's worked every cycle. The depths of the bear market, this thing goes down into that green accumulation band. And, I often post this chart on Twitter. And I like to do it at the extremes because the replies I get are hilarious because every time, whether it's at the top or it's at the bottom, all the replies are saying, yeah, but this time's different.
You're wrong.
Because of reason X, Y, Z.
Right.
Because of FTX, because of da-da-da. And sure enough, every time it ends up working. So, I'm not saying it's guaranteed to work in the future, especially if, the 4-year cycle, if this is the last 4-year cycle, we'll have to see if it continues to work in the future. But I think this cycle has I don't see a good reason why it wouldn't work again this cycle. Now, that doesn't mean that the Z score has to go into that pink band. But what I'm saying is when the market's getting overheated, you will see this metric go, +5, +6. And again, that's where you want to be thinking, what is my plan? What are my targets? Do I need to maybe take some risk off the table, given that indicators like this are saying the market is getting pretty hot right now? So this is a great chart in terms of managing those emotions, like we spoke about earlier.
It really is a great chart. And as you said, an OG chart that a lot of us use in our team looks at it all the time as well. So what I'm seeing from all these charts is that it looks like we've still got a ways to go right now in this cycle. This is going to come to the $1 million question. Where do you think we're at right now? And where do you think the cycle top is? And you can choose how you answer that question. You can answer it in a price prediction. You can answer it in a time frame. You can answer it with catalysts and probabilities. Every investor has a different way of approaching it.
Right. So, well, the good news is I think we're in the fun part now. I think if you've made it to this point, congrats. You get to just sort of sit back and enjoy a little bit. And one thing I would say just before we get onto that point is don't sweat it if, because obviously my site focuses on Bitcoin, because I think Bitcoin does affect the rest of the market. So you kind of need to know what's happening with Bitcoin to understand what's happening elsewhere. But I know people will invest in other things. Don't jump around things like, regularly to try and catch the next hot thing, because it's like, I think Chris Beniski describes it as like holding on to soap. The more you mess with it, the less you have, right? So that's just one little side point. Just be careful you don't do that. Where do we go this cycle? Look, yeah, I think we are at the start of the exciting part now. So we've still got ways to go, and you can see that in the data, right? I do think there's none of these metrics which are saying we're close to topping out here. And given what's happening in global macro, given what's happening in politics, I'd be very, very surprised if this ended soon, as in the next couple of months. So yes, the 100K level is going to be tricky to get through, but I think we will get through it eventually. And listen, I'm not going to give a specific price target because those are garbage. And anyone who gives you one on Twitter is talking absolute nonsense. You can pretty much ignore that target. What I can do, though, is give a potential range and some considerations. Potential range, I would say anywhere between 150K and 250K, but with caveats, which we'll come on to talk about. So I think, when I look at where price is now and look at where the metrics are, I could see, price, comfortably heading into that, given that we have, ETFs really coming on board now in terms of institutions and retail. Like literally the media's only just started to properly start talking about it the past week since the election. So that's a pretty sensible range, I think. However, we do need to just keep checking in on the metrics. As I say, when certain things like MVRV-Z scores above 5, have a plan and know what to do when that happens. One thing I would say about that range, and it's something that I think a lot of people forget or just don't know about because they weren't here at that time. Back in 2017, and that's the cycle I can give reference to because that's when I kind of came into the space. I can't comment really before then. Back in 2017, price went from about 10K to, let's call it 20K, right? The cycle top, give or take, in less than 2 weeks, right? Think about that. It like doubled in less than 2 weeks. So whilst I'm saying there's this range of 150K to 250K, if we get another blow off top, which we didn't get in 2021, if we get another one, we could sail past that, right? But I'm not going to give a number up there because there's a reasonable chance that that doesn't happen. But that's why I said right at the start, have a plan that probably has some element of scaling out because you won't catch the top. I have no idea if we're going to double in 2 weeks at the top or not. That could take us to, into the 300s. Who knows? No one knows. So just have a plan. Whether that happens or not, you'll still be happy.
Philip, it's fantastic to have you on the show. Really appreciate your wisdom, appreciate all the charts and data that you're sharing, but also appreciate your sound advice. It's very simple if you write your plan down now and you just stick to it. It's very hard if you don't do that and you get stuck making decisions when everybody is saying we're going forever and we're going up forever. And I think the thing you need to remember is if you're an investor, that you need to do what is right for you. And every influencer out there does not know what's right for you. They don't know that you have a mortgage payment or that you have a kid or that you are trying to buy a house or that you have absolutely no financial responsibilities and you're actually just young and trying to make as much money as possible. This is different for everybody. And so you need to make a plan that makes the most sense for yourself. Philip,
Absolutely.
I think we're going to have to get you on the show again, my man. This has been really nice.
It's been an absolute pleasure. Absolute pleasure. Really enjoyed talking about stuff. And yeah, maybe, as we go deeper into the cycle, maybe we'll check back in at some point. That'd be good fun. But yeah, just remember, don't listen to the nonsense on Twitter. Educate yourself, have a plan, and you'll do great this cycle.
Thanks so much. And for everybody, we will link in the show notes to Philip's Twitter and also to where you can find these charts on Bitcoin Magazine. Some of them are behind a paywall, but we'll give you guys a discount. Philip's hooked us up with a discount for you guys today if you want to access some of these charts. So check the link in the show notes. Thanks so much for joining us, everybody. I want to know quickly, what do you guys think the cycle top is for Bitcoin? Let us know in the comments. Tell us what your target is. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.